Now Trish is here with me. Trish, it's Friday. Let's do a wrap of the week in terms of currencies.
It's Friday, yep. Well, as far as currencies, emerging Asian currencies are concerned, they're all still down very much across the board, except for the rupiah, which is thanks to the resounding victory for Susilo Bambang. The rupiah is up about 0.5%, but all the other currencies, they're lower. The rupee, India's rupee is the worst hit, down 1.7% because of the larger than expected budget deficit. Even the ringgit and the South Korean won, they're all lower. And the market is really continuing to price in, or rather scale back the expectations of the pace of the global economic recovery. And then we had some negative news out of the US as well earlier this week. And, markets really not reacting as much to positive news as they are to negative news right now. And we have the second quarterly earnings coming up, especially for banking sector in the US next week. So risk aversion is still very much the theme. And we see this even in the major Asian currencies, which includes the yen and the Australian and the Kiwi dollar. Now the yen is up still about 3.2% against the dollar. Risk aversion there, we can see that very clearly. Australian dollar is still down about 1.7% against the US dollar. So yep, it's pretty much consistent. This risk aversion team is still very much the play going to the weekend.
Trish, stay put. Let's bring in our guest today, Nizam Idris, Executive Director and Currency Strategist at UBS. Trish was just talking about how well the rupiah has done, but the most optimistic target for the rupiah has been about, what, 9,000. That's not too great, is it?
I guess for now, in fact, I think the central bank is supporting the dollar rupiah at around about 10,000, to be honest. It has rebounded off 9,900 about a few weeks ago. And I think what central banks have learned from this latest crisis is that having a lot of reserve is useful. That minimizes your volatility and risk, therefore. And therefore, that's exactly what you should expect central banks to do. And central banks like Bank Indonesia are likely to accumulate reserve or buy dollars at around about 10,000 again, and downside beyond or below 10,000 seems limited to me. Yes.
How high is that risk of disappointment? You talked earlier about maybe the market has not factored in his team, for instance, his cabinet. I mean, how high is that risk of disappointment to the market?
Well, for now it's difficult to say, simply because everything seems good. We have the best mandate you can imagine for the president. You have his party gaining the most number of votes as well. So this is the most perfect political situation for Indonesia in many years, right? And therefore you have to be optimistic on that. But this is Indonesia at the end of the day, and therefore there is always room for surprises, and the surprises could come from Golkar party blocking future institutional reform, for example. SBY wants to shrink the government, to make it more efficient. That is a very important reform, which may stall if they still have to depend on familiar faces in Golkar who are traditionally against that.
Trish?
Nizam, yeah, apart from the rupiah, right, I mean, it is the only decent gainer among Asian currencies. But how do you see for the rest of the other Asian currencies for the rest of the year anyway? I'm hearing a lot of mixed reviews from traders saying that there are no, everyone's pricing the global economic recovery story, the Asian, leading the recovery story, and there really isn't there much value in them anymore. But then even if you short them, the Malaysian ringgit, which is the worst performer this year, is down only about 2.8%. So what kind of play would you actually recommend here?
I would go for relative value trades, to be honest with you. I mean, we are in a market where there is hardly any real direction. If you look at the euro, for example, it's been gyrating within a rather large range, and yet end the week typically around 1.4. So to me, I think this is the best time for relative value. And relative value, by relative value, I think you should look for currencies that are, of countries, large, close countries, in other words, not dependent on trade. I think those currencies would do better than currencies of small open economies like the Sing dollar, Malaysian ringgit, Thai baht, Philippine peso. I dislike those currencies. I like Indonesian Rupiah. I like Indian Rupee at maybe closer to 50. I like the CNY, of course.
Okay, Niz, thank you so much for that. Nizam Idris of UBS with us on The Trade today.